everybody. Welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, let's do a quick systems check. If you would, type OK in the question box if you're hearing me clearly and seeing my screen all right. Okay, great. Looks like we're up and running fine. If anyone has any issues as we go along, feel free to let me know. As always, keep in mind that there's risk involved with each trade you take. No one trade is guaranteed to bring profits. So you want to make risk management part of your plan in a way that makes sense for your risk tolerance and balance level. And also keep in mind that what we're covering is not meant to be financial advisement, but is coming from an educational perspective. Now, real quick before we get on the live charts, for anyone who's new to things, what is technical analysis? Basically, it's looking back at the price movements from the past, usually on candlestick charts, or the type of charts that traders are using, and you're looking for signs of predictability, perhaps from the past, patterns that look repetitive, price levels that look important. There are all kinds of formations and figures and patterns that traders look for and names they've made up for them. But for the most part, we're looking at support and resistance levels. We're looking at trending patterns or ranging patterns, and as the movements are doing those different types of patterns, they can make various types of formations that traders tend to identify. So we'll go over some ideas in that regard, mostly with manual methods of technical analysis, meaning drawing our own lines, finding our own patterns. On occasion, we put an indicator or two on to help us with that. But in general, it makes more sense that you learn how to find those patterns yourself on the charts. Basically, an indicator does the same thing, looking back at the past price movements and giving you some pictorial representation within the indicator or on the chart itself to try and let you know when the indicator believes maybe you should buy or sell. But the indicator is not smart enough to know what's going on fundamentally, so you have to take into account that your own manual methods combined with knowledge of the current fundamental news situation many times is a much more powerful set of tools, and use an indicator or two as a guide can also be helpful. Now, if you have any questions, you want to give any input as we go along, feel free to do so at any time. From our main website, we can log into our web trader, which allows you to trade on the MT4 and MT5 accounts. You might notice we have a bit of a new look. We've rebranded a bit with the color schemes and the look of things on the website and platform. Now, when we trade from mobile, you can trade from the MT4 and MT5 apps, but if you want the functionalities that we find in our web trader, meaning the free signals, the technical analysis help, the fundamental news help, market buzz, etc., all of those features that we have in the web trader are also found in our mobile app, AvaTrade Go. And so both allow you to trade on MT4 and MT5 accounts, but with the advanced functionalities that I mentioned. Now, if we log in the upper right corner here, we'll be in the web trader. And before we get into the technical analysis, which is obviously the focus of this webinar, I think we should talk a little bit about the fundamental news situation. And there are a few things that I'll touch on that I think help set up then the technical analysis plan in terms of the directionality that you might prefer to find entry points to trade. Now, one of those bits of news is the fact that out of the European Union today, there's a bit of data that came in, quite a bit, that underperformed, showing a greater slowdown in the economy maybe than expected. That's actually probably good news. Not good news for the strength of the euro, but good news for those worried about high inflation. The fact that some of that data came in lower than expected, perhaps indicating that we're on our way out of the high inflation problems eventually here that are hurting really a lot of countries around the world. Now, Other data that came in today out of the US was the opposite story. Again, the US economy coming in stronger than expected. Lately it was CPI data and then PPI data. These are inflationary data numbers coming in, consumer pricing index, the producer price index. Lately those numbers have not come down. They've actually creeped up a little or stayed flat. And so all the measures that were taken with all the interest rate increases in the US to try and bring down inflation, it worked some, but it has not finished off the job, and it seems to be struggling in terms of the monetary policy to really get inflation into that level of 2%, 2.5% inflation that I think they're looking for in the US, and it's sitting more up around 3.5%, 4%. And so there's some fear there about that. And out of the US then again today, the housing sector came in better than expected with housing starts, etc., showing greater demand and better numbers than expected. And typically you'd say, well, that's good news. It's great that there's good demand for housing and prices are strong because there's strong demand from buyers. But the fact is that's not helping inflation come down. And so with higher than expected data the past couple weeks, and then again today, this housing data being stronger than expected, we saw a bit of nervousness hit the markets, and perhaps we could look for potentially the USD to have some bullishness as we head towards the third thing I wanted to mention, which is the FOMC committee meets tomorrow in the US. You're going to have the press conference and the rate decision, and so it's kind of later in the trading day tomorrow, but there's a lot of anticipation as to what the statement will be from those who are speaking and what the policy initiatives will be moving forward in the US with regards to monetary policy. And so the interest rate is expected to stay the same. They're not expected to lower it or raise it. There's hope on the markets that they'll at least talk about lowering interest rates soon. And if they do, or if they unexpectedly do lower the interest rate tomorrow in the US, you could likely see some optimism on the market and a weakening of the USD. When I say optimism on the market, I mean the stocks, the equities, the major indices could get bullishness if there's talk about imminent rate decreases in the US. But the opposite could happen, and there's nervousness that the opposite will happen in terms of what they have to say in the statement tomorrow, because the data has been so strong. And like I said, again today, the US data, the housing data was stronger than expected. And so it's hard for them then to come in tomorrow and say, we know inflation's still higher than we like and it's not coming down, but we're going to go ahead and lower the interest rates anyways. It's kind of unexpected that they would do that. And so there's fear that they're going to come out and talk more hawkish about rate policy and that they're not going to be able to lower interest rates soon. And if that is what happens, we could see a strengthening of the USD again from that type of talk. No guarantee, but that's been kind of the trend with these policy statements. Okay, so with that as a backdrop, and actually one other thing, there was some data out of Canada today that was weaker than expected. And so the economy slowing down in Canada, inflation coming down maybe even more than expected, also in the European Union. So those currencies have reason maybe to be a little weaker because there's anticipation that they don't need to keep interest rates high in those countries, in those regions. And the opposite in the US, there's fear that they may not be able to back off on the interest rates just yet. So with that as a backdrop, then we can go into looking at signals and charts to see if we can find entry points for preferred directionality, meaning if we expect the euro to be kind of weak and the USD to be kind of strong right now based on the fundamentals, at least until that rate decision tomorrow and an FOMC statement, then maybe we're looking for high entry points to short on something like euro USD or low entry points to buy on USD Canadian, to go with a strengthening USD potentially and a weakening euro or Canadian. Okay, so if we look at the euro USD, there's probably a signal on it. I have no idea what Trading Central's signal is saying. Let's take a look. It's a buy signal, but it's actually reached a bit of a resistance level here. And so the pivot level's down here. We see it's climbed with the buy signal. It has not reached the resistance levels up high, but has reached a resistance at this mark here that it seems like it may be having trouble pushing through. So in the short term, it looks like the expectation is the euro could climb perhaps towards these resistance levels up here. In the bigger picture heading into tomorrow, probably since there's the rate decision in the FOMC statement out of the US, it could be that the euro would have trouble breaking past these resistance levels up here, which are the take profit suggestions for the shorter term buy signal. Okay, I feel like the fundamentals are working against this signal, by the way, because of the strong data out of the US today and the weaker data out of the European Union. It feels like the fundamentals are working against the signal, and you can see that in fact it is, because the movement has fizzled out here at a resistance level and has not touched anywhere near the take profit suggestions. Okay, so a lot of times if you consider the fundamental news, you can look at a signal that you might otherwise be inclined to follow and decide, I don't think I'll follow that signal, perhaps, if you take into account the fundamental news. Okay, now if I'm going to pull up this chart then on the Euro USD, I probably don't want one-day candles. Let me go more like a 1 hour candle. And now I can see here's the take profit suggestions. These are resistance levels that I drew from last week, and they fall right in line with where the short-term signal is saying you might take profit, which is in this area here. Why would they say take profit here? Because there's resistance here from the past where the price had trouble hitting, couldn't go above, and dropped. And it was after breaking the support level here, once it broke, it became resistance here. And so this buy signal is not expected to break past this level here because there's resistance and because probably there's fundamental news that's creating a wait and see situation. Okay, so if I was going to short this from tonight leading into tomorrow, it might make sense to get my stop loss above these suggested take profit levels on the shorter term signal. So since these take profit levels from the signal are resistance levels, if I was going to short this, I probably want my stop loss above these resistance levels right here. Okay, like 108.80, something like that. So if I was going to do that, then I would be looking at my stop loss above the resistance levels and my take profit somewhere before it would have to break a support level. Why would I want my take profit before this support level down here where it bounced? Because I anticipate some hesitancy with these movements not really being able to break through major price levels until we know what happens tomorrow with the FOMC committee. The movements may start to range, meaning not breaking through the resistance and not breaking below the support. Okay, so if I'm looking for this to range back down, then I might look for a take profit somewhere above today's low. Okay, so let's say at this mark here, I could be looking to try and take profit. Okay, so now that my technical analysis is set up, I'm using the take profit levels from the short-term signal as my resistance levels for my sell, even though the short-term signal was to buy. Why would I choose to do that? Because the fundamental news feels like it's working against a rapidly strengthening euro or a rapidly weakening USD. Okay, now you could disagree with that, but the point is the process right now. The process is evaluate the fundamental news, and you may evaluate it differently than I would, but the process of evaluating the news as you know it and trying to understand which way do you think the momentum is running, then setting up your trade if it's an opportunistic entry point for the direction that you think it should go fundamentally. Okay, and so if I'm going to short this, then my take profit then is down at 108.40 approximately. And my stop loss is up here at 108.80, above both of these resistance levels here from the past. $108.80. Okay, my potential profit, even with my resistance level above, my stop loss above 2 resistance levels up here, my stop loss still a good distance away, but still risking less than what my potential profit is. And I can hit my take profit without even having to break a major price level. In fact, without having to break today's low, if it just returns to where it was this morning. Okay, so now I have to decide trade size. Now that I have the directionality determined by the fundamental analysis, my exit points with stop loss and take profit determined by technical analysis, and now I need to adjust my trade size for those entry points and exit points. So if I do 1 lot, I'm risking 150. Maybe I'm willing to risk 500. Maybe I'm willing to risk 1,000. It depends on your balance and your risk tolerance. So you risk a certain percent of your balance, maybe 1%, 0.5%, 2% per trade. If I'm wanting to risk, let's say 1% per trade, then that's around $635 with the balance I have now. So if I do 3 lots, I'm risking 450. If I do 4.15, I'm risking 635 almost. Okay, so there's my risk, there's my potential profit over 1,000, and I sell. Okay, so the tools in our platform and app make it so you don't have to calculate pip value, you don't have to do all of that manually, and now I can take a look at my open trade. I know exactly how much I'm risking to my stop loss and how much I'll make to my take profit if it gets there. And on the chart itself, I've got the lines I drew, support and resistance. I've got my stop loss here. I can adjust the stop loss at any time, left click and drag. So I've got my stop loss above the resistance levels where I want it. I've got my take profit down here, which I also can click and drag. I've got my take profit where I want it before the support level down here. You see it's labeled take profit, open price, stop loss. Okay, and we can adjust these trades anytime we want. I can click on the trade and adjust it manually as well if I wanted to. Okay, I can go in and change whatever features I want on that trade. I can't change the entry point, obviously, because it's already open. But the other measures I can adjust. Okay, so any questions on what we covered, the concepts that led us to the simulated trade, the directionality, etc. Okay, now one other currency pair I mentioned was the USD Canadian, because the Canadian announcements today came in worse than expected, which is kind of a little bit bearish maybe for the Canadian dollar. One thing to consider though is crude oil has been climbing today, and that tends to be bullish for the Canadian dollar. So I could understand if the Canadian dollar has pulled the US dollar down today because crude oil has been somewhat strong. So that could give a good entry point if you think now leading up to the FOMC announcement or statement and rate decision, if you think that the USD will re-strengthen, we might find a nice entry point because crude oil, I think, has helped strengthen the Canadian dollar today. If you're wondering why crude oil would affect the strength of the Canadian dollar, their #1 GDP export is crude oil out of Canada. And so, they're not the world's biggest supplier of crude oil, but for their economy size, the amount of crude oil they export is very significant. because it's a major portion of their GDP. So when crude oil prices climb, that tends to be bullish for the Canadian dollar. So, and when in fact we do see over the past few hours, look at the drop in the USD against the Canadian dollar, okay? And it looks like it's trying to bounce right now off a support level. So this looks like a situation where we've got a support level here. You see old resistance, 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 breakthrough of that resistance here, climb, pullback, and bounced right off of that old resistance. It bounced just an hour ago off that what is now support. So it confirmed that support level. So to buy on this, take profit at today's high, stop loss below the support, easy decision, nice entry point, technically speaking as well. There's double reason here for the USD to climb against the Canadian. One would be stronger than expected data out of the US, and the other would be weaker than expected data out of Canada. And why did we get such an entry point then where the Canadian dollar actually pulled the US dollar down? Perhaps because of crude oil, like I said. So we're looking at potential take profit $36.10. Potential stop loss $35.50 or 49. Okay. Risk 2,700, so I need to adjust my trade size. What if I do 4 lots? I'm risking 530. 5 lots, risking 663 to make almost 1,600. Now we missed some of that entry point while I was talking. It was climbing, but that does confirm a nice bounce off of this support level that occurred just one candle back. And it's not always that perfect, but look how perfectly this touched the support level and then bounced back up. If you follow this line across, that was the resistance level here. Resistance, 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 resistance. Here's the breakthrough candle, and then it became support. Okay, classic support and resistance pattern where once whatever in the economy allows the resistance level to be broken occurs, then that same news holds it above that level as support at that point. Okay. Any questions on this US dollar, Canadian dollar simulation? The reason in terms of the fundamentals or the idea about the entry point, exit point. And we can kind of ignore these lines here. And the target was take profit near the high that it was at just about 5 hours ago without having to break that high. And a shorter risk, smaller risk to the take profit. Okay, so I mentioned crude oil. We can look at it. And so if indeed the USD is going to start to strengthen leading towards the FOMC announcement tomorrow with fears that they're not going to be able to lower interest rates and fears that that could stymie the economy eventually, if indeed the USD will strengthen leading up to that, then we could see a pullback of crude oil as well, which we're starting to see already. We see that crude oil went up, which we already talked about, helped strengthen the Canadian dollar. Crude oil is starting to drop with the strengthening USD, which gives reason for the Canadian maybe to start to weaken for a second reason besides those weaker than expected announcements. So if indeed you expect the USD to strengthen, you can put your stop loss above today's high on crude oil, put your take profit maybe at the first support level down here where you find support, and to short crude oil, you'd have a longer take profit, larger potential profit, to risk if you put your stop loss above the resistance level. So stop loss maybe 83.10 to get above the resistance, and take profit 81.96, so we could say 82 even. Whoops, should be a sell. I clicked on the buy by accident. So again, and we're losing entry point as this drops because really the fundamentals are on our side here, pushing this down. Take profit, we said 82. Stop loss, 83. Okay. Still larger potential profit compared to risk. We just need to adjust the trade size to be the risk that you'd want. Looks like 1.5 lots might do it. About 660, it's around 1% of my balance to make 990, and it's off. Okay, so going with the downtrend and the strengthening USD, hopefully the fundamentals are on the side of that with the FOMC announcement tomorrow and the rate decision tomorrow out of the US and the fears that that brings. Looking for this to try and test the support level that it was just at earlier today, and hopefully not have enough momentum to break the resistance to hit our stop loss. We've managed each of these 3 trades with opportunistic entry points from a technical perspective because the stop loss distance is shorter to get beyond the resistance than the distance of the take profit, which is longer for a better potential profit. So technically speaking, it's an opportunistic entry point in the direction of what we think maybe the fundamental news should move these prices, and overall risking maybe 3% on the 3 trades to go after 8 to 10% potential profit if the 3 trades came through. So with this type of setup, you only need to be right maybe 40% of the time, even 35, 40%, and you can have overall profit. Okay. It just depends on how opportunistic your entry point is. Obviously, if we started this trade about 20 minutes ago, we'd have been in deep in the money already with this movement down. As it stands, these movements are just getting started, and perhaps it could take some time to get in the money. We've got 1 that's in the money and 2 that are trying to potentially go the right way, depending on how the momentum works out for us. I think this is a good place to take questions if anyone has any. I'll pause for a moment. Okay, I don't see any questions popping up just yet. We could take a look maybe at one of the major indices. And so if we're looking at something like the US 500, we can look at the technical signal, and we see it's a buy signal, but it already reached the key level. So this falls into the same playbook that we're talking about, that perhaps the momentum has run out on the weak USD and the other currencies and equities climbing against it. We see that this movement also has established resistance. It has a few wicks at the top of this movement. This one actually already hit the take profits. The first one it blew right by, and the second one it just about touched. So a highly successful signal here in the buy signal that already came to fruition. And now it certainly looks like an opportunistic spot that if you think fear will rise leading into the FOMC committee rate decision tomorrow, then this is a great spot to short something like the US 500 just below the resistance level. So let's go to 2-hour candles maybe, and we can see that today's movement reached this resistance level right here. Okay, this is a price where it hit and dropped earlier in the week, and now back up, hit again, and started to push down once more. If you feel that there's not going to be enough momentum leading up to the FOMC announcement to break through much of any resistance, you could have your stop loss above this resistance level here for a short stop loss, or you could say, you know what, I'll get it above a second resistance level up here to make it a bit more secure. So it's even less likely to have a false breakthrough and hit your stop loss. So I'm setting this up where it would have to break one resistance level and then a second one, the resistance here from last week, in order to hit the stop loss. And in order to hit the take profit, doesn't have to break any support levels. It just needs to approach today's low. I'll put it right at even 5,200. So it doesn't even have to get down to the low of the day down here. Okay, so if I was going to short this then, knowing that the buy signal already hit the take profit, and reached the spot where the signal assumed it might have trouble going any further. Take profit, 5,200. Stop loss above the second resistance would need to be above 52.52. So let's say 52.55 for the stop loss. Okay, looks like about double the potential profit compared to risk. A bit less than that, not quite double, but a much better possible profit compared to risk. And now we just need to adjust the trade size. So if I go to, say, half a lot, now I have a risk of about 950. 0.35 lots, risk of about 1% of my balance. And again, I keep doing examples of around 1% of my balance. You could do a different percentage, but you should know what the risk is per trade that you're comfortable with. And then this helps you calculate that level of risk, whether it's 0.5%, 2%, or 10% for that matter per trade, which obviously I think would be highly risky. I tend to be in the single digits for sure, and towards the lower end on percent risk per trade. Okay, so we've got this set up then and risk managed in the direction that we think makes sense fundamentally, or that at least I'm simulating that we think, and we can go ahead and make that move. Okay, again, opportunistic entry point, meaning take profit is closer than take profit is a longer distance, allowing larger potential profit compared to risk to the stop loss. And we feel, based on the discussion, that maybe the fundamental news is in favor of helping this movement retreat back to where it was just a few hours back. I see a request for the GBP JPY. I will say about the pound, there's better than expected news out of Great Britain, which could create some bullishness on the Great Britain pound. And we see that here. Look how strongly the GBP went up. For those of you who don't believe in fundamental analysis, this is a classic example of why maybe you should consider pairing the fundamental news with your technical analysis, because the fundamental news back this morning out of Great Britain was better than expected. And that tends to be bullish for the currencies when they have better than expected news. Here was the resistance level. So as soon as this broke that resistance, that's an uptrend. And you could have been buying on this uptrend from this point, from this breakthrough. And it hasn't stopped uptrending since then. Okay, it's a strong uptrend. It broke the resistance here, pending order above the resistance, knowing that there were a lot of announcements today on the pound. It breaks through, up, you ride it until you reach a resistance level that you think it can't break. Okay, it really broke through some resistance today, because here's another resistance level here that it also broke through, a higher one. Okay, so we've got two broken resistance levels today, and look at the size of that bull candle. Okay, we need to go to 1 week candles to try and find a resistance level. And still on the 1 week candles, it's at a years long high. Okay, there's no resistance in sight. Go to 1 month candles. And again, no resistance. We're looking at highs that we haven't seen for years. Okay, and so when will this stop rising? We can't look at it technically because there's no resistance. Okay, until we go back. Let's see, this is back in 2015. Here's the resistance level up here. Okay, this is the resistance up here, this line here that I just drew. Okay, and so that's up around 194.88. Okay, 194.88. We're at 191.99. So even though this has been climbing, the 1 month candles We had to go back a number of years to see the resistance. Shows us that this won't meet the next resistance until 194.88 or so. So it's got, what, 300 pips almost to climb before it reaches the resistance. So on the 1 month candles, this looks like it could keep climbing near 300 pips before it reaches the 1 month candle resistance. If we go to, 1 hour candles, you say, wow, it looks like it's going to pull back, right? So in the short term, after this much momentum and climbing, it looks like it wants to pull back, but don't feel like if you short this that it has to come back long term, because we just looked on the 1 month candles and there's not resistance upward for another almost 300 pips. Okay, so you could play the pullback here, and certainly it could pull back, and it looks like it's trying to right now, but you'd be trading against the momentum and against the fundamental news. Okay, it might be smarter to hope for a pullback to then buy from a better price. I know it's hard to buy from such a high point because it's pulling back. So for a short-term trade, it's a tough buy. And if you're a short-term trader, you might wait for a better entry point to buy on this, or you could short the pullback right now because it looks like it wants to pull back a bit. But then you have to have caution because you're trading against the momentum and the trend. Okay. All right, everybody. I think this is a good place to stop. Any last questions, comments? Yeah, there was a rate decision, an increase in Japan, but you see the yen did not strengthen. So they must have had some dovish talk along with that rate decision, because an increased interest rate typically strengthens the currency, and it did the opposite. The USD went up against the yen. The pound went up against the yen. The pound more dramatically, I think, because there were also positive announcements for the Great Britain pound. So this was quite a jump and quite a climb. And you might see something similar, just not as dramatic, on the USD JPY. Okay, it's more flat. You see it, it's more sideways. And that's because we're leading up to the FOMC news. So on the USD JPY, it's more of a cresting hill here that looks ready to drop. And on the GBP JPY, it's more like a rocket going straight up. Okay, you see the difference. So that's why I said it's hard to short this one, because it just has a lot of momentum upwards. If you're looking to short something against the yen, it might make more sense to look at something that has reason to be weak, maybe the Canadian dollar against the yen, something like that. Okay, or even the euro against the yen. But again, overall, the trend is not down with the yen pairings. It's up. Whether it's euro, USD, GBP against the yen, you're trading against that trend if you sell. And I know it's, it's something that is enticing to try and trade from the high point to sell down. And traditional ideas are, buy low, sell high. But if you're selling high sometimes, like the GBP JPY is high, you're many times trading against a strong trend. Okay, and today it looks like that's what it would be. But you pick your spots. Okay, if you're going to trade against the trend, you got to be, split second with your timing to get in and out before that momentum returns to go against you. Okay. All right, everybody. Thank you for joining. Good luck with your trading. Expect a lot of movements on the charts leading up to that FOMC statement and rate decision out of the U.S. tomorrow. So put on your seatbelt, risk manage your trades, and go after those large potential profits that I think will be there. All right, everybody. Good luck. Bye for now.